Thanks for clicking! All eyes were on Stats Canada this morning as it was set to release Canada's inflation data for the month of September, with most economists predicting inflation to come in less than 2%. We got our answer at 8:30 this morning when those economists were in fact correct, with inflation coming in at 1.6 in September.
I told you this would happen, didn't I?
And the data comes amid the release of the Bank of Canada's Survey of Consumer Expectations and Business Outlook surveys, both of which show that inflation expectations continue to fall. Yet the surveys also show that there continues to be a problem of trust, with Canadians thinking that inflation is much higher than that which is being stated by Stats Canada, which is in fact working its way into economic decision making.
Why?
So what I want to do today is go over Canada's inflation data for the month of September, take a look at the Survey of Consumer Expectations and Business Outlook surveys, and then discuss some implications. We are eagerly awaiting the Bank of Canada's rate cut announcement coming next week along with its press conference, and we'll obviously have an update out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this inflation data. On at the data, as mentioned, Canada's inflation rate came in at 1.6% in September, leading many to argue that this will now clear the way for supersized rate cuts coming from the Bank of Canada.
Thousands.
Major upward contributors to the inflation rate were mortgage interest costs, rent, auto insurance, food from restaurants, and property taxes. In contrast, those items pushing inflation down were gas, phone, women's clothing, cars, and men's clothing. So, again, as before, so long as you live in your uninsured car and don't plan to eat, everybody's good to go.
So you want to buy a house? Just buy a house.
With that said, measures of core inflation, those measures which strip out food and gas, and the measures the Bank of Canada looks to when deciding interest rate policy, remained a tad sticky, with core median staying at 2.3 and core trim remaining at 2.4. Further, that's the second month in a row that core median came in a bit hotter than the Bank of Canada would like to see. Ideally, the bank would like to see the month-over-month a bit lower, especially given the surprise jobs report to the upside that came in last week, along with the news that the U.S. economy isn't struggling as much as was previously thought. A lot of that economic activity is coming from deficit spending, which is in itself inflationary, but that's a different video for a different time. So, headline inflation coming in at 1.6%, definitely good news. Core inflation remaining a tad sticky, not really awful, but not really that great either. And we can see all of this through the bond market's meh reaction, with yields dropping a bit, but nowhere close to matching the upsurge in bond yields we've seen over the past month on hotter than expected US data.
Things are now in motion that cannot be undone.
So, Canada's inflation data coming in at 1.6%, definitely great news. Core inflation not showing as much progress as the Bank of Canada would have hoped. And this data is showing up in the Survey of Consumer Expectations. As inflation is coming down, we are seeing a reduction in expectations on the part of Canadians where inflation will be over the next 1, 2, and 5 years. With that said, perceptions about current inflation continue to remain elevated, with Canadians thinking that third quarter inflation was around 4.82% compared to the 2.5% to 3% as reported by Stats Canada. And it's hard to disagree with them. I think we all agree anecdotally that prices are much higher than that which is being reported by Stats Canada, and if we use the Wayback Machine, we can see that back in October of 2020, Brussels sprouts were listed at $4.39 per kg, and now they're sitting at $10.32. A 200% increase, despite Stats Canada saying that food is only up by 24% since October of 2020. Now, obviously, Brussels sprouts are not representative of every food everywhere, but I think most would agree that over the past 4 years, food has risen by much more than 24%.
Teach me.
Speaking of Canadians' lack of trust, let's move on to the survey's results on the real estate market, where we're not seeing a big change in the number of Canadians planning on buying over the next 12 months, despite the interest rate cuts that came in the third quarter and continual predictions of more. Further, according to the survey, only 8% of respondents plan on buying if interest rates drop further, and of those, 80% would need to see rates drop by 100 basis points or more, with 58% needing 200 basis points worth of rate cuts before they considered buying. Given that the media is so quick to publicize and often misquote, any poll that shows rate cuts will result in would-be buyers flooding into the market. I'm sure this one, coming from Canada's central bank, will no doubt receive similar attention.
I didn't read it.
To be fair, that's probably true.
Boom!
And finally, this lack of trust, what the media reports, what the government reports, and what the Canadians actually think, is also feeding into the economy, with 58% of respondents reducing spending on inflationary worries and 64% in response to interest rate expectations. So, Canadian consumers don't really believe that inflation is coming down in short order or that interest rates are going to come down either. This despite the stated inflation being below 2% and the near consensus that the Bank of Canada is going to continue to cut rates hard and fast. So we can see it right there in the Bank of Canada's surveys. Canadians don't think that inflation has come down as much as StatsCan says it has. They're not as hot on the housing market as the media would have us believe, and as a result, this mistrust is affecting their spending decisions. They're not spending due to worries over inflation, and they're not spending due to worries over continual higher interest rates.
Tell them I can be trusted.
Businesses, on the other hand, have a bit more of an optimistic outlook. According to the Business Outlook survey, most businesses think that inflation will continue to remain within target over the next few years, with wage expectations continuing to plummet back down to pre-pandemic levels, which, as we've talked about before on this channel, will no doubt come as good news to the Bank of Canada as they try to prevent a wage price spiral. With that said, while businesses appear to be more confident on the inflation front, not so much on the economy, with fewer firms expecting to hire over the next 12 months and fewer firms planning to invest going forward.
I think we're going to have a banner year.
So, in summary, while both firms and consumers appear to think that inflation is coming down, consumers mistrust the data a bit more than businesses, with businesses thinking that inflation is going to continue to remain within target, but consumers seeing inflation as being higher over the next few years and being higher as of right now. So, in summary, Canada's inflation data coming in today at 1.6%, definitely good news on that front, though measures of core inflation, those measures the Bank of Canada looks to, showing a bit more stickiness than the Bank of Canada would like. Nothing awful, but not as optimistic as the central bank would like to see. Looking at these surveys, Canadians at large do think that inflation is coming down, though they aren't as likely to believe the experts, as likely to believe Stats Canada, especially relative to that of businesses, which do see inflation coming down and think that it will remain down going forward. On the one hand, I think consumers are exactly right. Inflation is no doubt higher than 1.6%. Any trip to a grocery store will tell you that it is higher than that 2.75% food increase as reported by Stats Canada. And as a consequence, given all of that, it's not surprising that Canadians do not trust the official figures coming down from the government, or coming down from the media as evidenced in the real estate section. But this whole Canadians not spending because they don't trust the data, that they don't trust that inflation is actually sitting below 2%, that they don't trust that the Bank of Canada is actually going to be lowering rates, that could end up being a real problem, as if the economy is heading into a downturn, and the Bank of Canada is looking to lower rates to get Canadians to spend, and they still won't spend, well, that could become a real problem for the Bank of Canada. Bank of Canada Governor Tiff Macklem did say at one point that the bank is going to have to work to earn the trust of Canadians, and judging from these polls, judging from the central bank's releases, it doesn't look as though they've achieved that objective as of yet. With that said, we will continue to track Canada's inflation data, its economic data, on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.